Welcome, viewers, to an appendix to Section 1 of Part 3 of our screencast on how the Tax Cuts and Jobs Act will affect all of us. My name is Richard Land. I'm an attorney and a member of the Danbury, Connecticut law firm known as Chipman, Mizuko, Emerson. As we closed our last video on aggregation of certain trade or business tax attributes, that was in Section 1 of Part 3 of the video, we discussed what a trade or business is for tax purposes, and in particular, what a trade or business is for pass-through deduction purposes. And we talked about our plans to post additional videos containing information on planning to maximize the deduction for pass-through income. We're in the process of working on that video now. In the meantime, on January 18th of this year, 2019, final regulations and a related special notice were published by the IRS. This is an appendix to our last video, which was Section 1 of Part 3, to discuss the special notice. It's not always easy to determine whether your rental real estate activity satisfies the somewhat vague definition of a trade or business, so the IRS tried to provide a bright line test, you can call it a safe harbor, for determining whether the deduction will be available to you for the rental income you receive. The safe harbor is described in Notice 2019-07 in the form of a proposed revenue procedure. If your rental activity income satisfies the criteria described in the notice, you can be confident that your rental activity income will qualify for the 20% pass-through income deduction under Section 199A of the Internal Revenue Code. The safe harbor provisions apply only to rental real estate enterprises. A rental real estate enterprise is an interest or multiple interests in real estate held directly by an individual or a relevant pass-through entity, or RPE, for the production of rents. But the definition excludes triple net leases and interests used to any extent as a personal residence. Also, commercial and residential real estate cannot be part of the same real estate enterprise. For the purposes of the 20% deduction that applies to pass-through income under Section 199A of the Internal Revenue Code, your rental real estate enterprise, which I'll sometimes refer to as an RRE, will be deemed a trade or business if certain requirements described in the notice are satisfied. Keep in mind that whether your rental activity is considered a trade or business is of central importance. Only certain income of a trade or business, and I want to emphasize use of the phrase trade or business, can qualify for the deduction. The notice says that your rental activity will be treated as a trade or business if you maintain separate books and records for each rental real estate enterprise, if you or your agents devote 250 or more hours per year to rental services with respect to the rental real estate enterprise, and if you keep contemporaneous records related to the rental services. The records must include the hours performed, a description of the services performed, dates on which the services were performed, and who performed the services. The requirement that the records must be contemporaneous has been waived for 2018. So, if you don't have good records for 2018, you can try to do the best you can to reconstruct how your time was performed in that year. Some things you do will count as rental services and some things will not. The notice includes a specific list of activities that count as rental services. Here's the list: advertising to rent or lease the property, negotiating and executing leases, verifying information in the applications of prospective tenants, daily operations, maintenance and repairs, management of the real estate, purchasing materials, and supervising employees and independent contractors. Keep in mind that you'll get credit for the time put in by your employees, agents, and independent contractors, so if you have folks doing the work for you, you should insist that they keep contemporaneous records of the work that they do. Also, keep in mind that some of the time you devote to your rental activity will not count as rental services. The time you or your agent spend traveling from property to property will not count. Also, Time devoted to financial and investment management relating to your real estate rental activities will not count, so the time you spend arranging financing, acquiring property, studying or reviewing financial statements or reports regarding your properties, or planning, managing, or constructing long-term capital improvements will not count. To claim the benefits of the safe harbor, you must file a statement indicating that all the requirements of the notice have been satisfied. The statement must be signed by the taxpayer or authorized representative and include the following statement. Under penalties of perjury, I declare that I have examined the statement and, to the best of my knowledge and belief, the statement contains all the relevant facts relating to the revenue procedure, and such facts are true, correct, and complete. That concludes our appendix to Section 1 of Part 3 of our screencast on the provisions of the Tax Cuts and Jobs Act that relate to pass-through trades and businesses. Additional sections in Part 3 will cover planning to avoid the phase-out zone, additional planning to maximize pass-through income deductions based on wages and capital expenditures, how transferring business interests to family members and trusts can create additional pass-through income deductions, and how converting pass-through income to wages can increase pass-through deductions. Thank you for viewing.